Hello, my name is Przemysław Kwiecień. I'm Chief Economist of the XTB and you're watching our weekly trading webinar. So today the story of the presentation is Canopy time, because this is the sector which is in the spotlight of the Reddit, you'd say trading, but maybe even more speculating community. But actually we'll talk about much more than just the Canopy stocks, which are, like I said, under the spotlight right now. And let's start from the top news today, which is records after records on Wall Street. US 500 is rising sharply today in the morning after very strong close Friday ahead of the President's Day, which takes place today in the US. So cheerful moods for sure, only 50 points away from the 4K mark, which is quite improbable. Bear in mind that less than 1 year ago we were close to 2K after the pandemic hit. So as you can see on the chart on the right hand side of the presentation, that actually Russell, which has 2,000 stocks in it, and these are the smaller stocks, it actually gained much more. It rose 140% from the lows in March 2020, even though right now, as you can see also on this chart, around 35% of the companies is loss making. So this is quite incredible, and this I think shows how detached markets have become from the economy. The other maybe much smaller way to show this is to show the reaction to the Friday University of Michigan sentiment survey, or actually the lack of it, where household sentiments deteriorated quite significantly. Even though you have these Biden checks, you have the chance of economy reopening in the US with the vaccination, so on and so forth, still the index is at very low levels, whereas 1 year inflation expectations rose again and rose to 3.3%. So you would say not very rosy combination of perhaps not too good looking economy and some chance of quickening of inflation. And right now we see the impact on the US bonds, where 10-year yield increased above 1.2%, but with no reaction on US dollar oil stocks so far. Oil prices surge on Middle East tensions. Oil is looking really buoyant at the moment and doesn't seem to be stopped by any factors. And obviously any tensions in the Middle East, they support oil prices, since you never know what may happen. I don't think it's going to be anything huge. We have seen these proxy wars between Iran and Saudis many times, and right now I guess it's another page from that book. So probably it's not going to be anything big. However, obviously, since we have a strong trend in oil prices anyway, it augments this and makes the surge even stronger. The UK variant is scary around the world, continues to wreak havoc from place to place, and the latest victim is New Zealand. As you know, New Zealand was very strict with lockdowns in 2020, and again, as soon as they discovered the UK variant there, they reintroduced lockdown. So just that's a reminder that we are not out of the woods yet in terms of pandemic, even though the markets are out of the woods for a long time. On the positive side, Japan had a great Q4, where the economy grew 1.2% year over year. Obviously, a lot of people focuses on the quarterly annualized growth, which is what the media side, which is above 12%. But with these quarter-to-quarter changes in pandemic, it's hard to compare. Whereas this shows you that actually the Japanese economy in the fourth quarter of last year was bigger than it was before the pandemic hit. So that's quite an achievement for Japan, which didn't do very well for a long time. But right now I think it's not sort of great economic policies that were there, but rather the fact that because of the lockdowns in the services sector, people spend more on durables, and the economies that have bigger industrial sectors, that have bigger pro-export sectors, they benefit from this trend, and Japan is this club. And this is the reason why the economy did well in the fourth quarter of last year. And finally, in the top news section, US sales FOMC minutes is the key, are the key points for this week, both Wednesday, whereas Monday is off for President's Day and China still on holidays. Okay, let's move on to the story of the week, which, like I said, is cannabis sector. As you can see, Tilray was the stock that people flocked to after the GameStop mania settled down a little bit. The prices obviously went 90% from the peak, even though they are still higher than they were before all of this began. Right now, obviously, for most of the people, it's clear that that was a pure pump and dump example of money that is just provided by the central banks, and it's ton of it, whereas the investment opportunities in safe places are scarce. So people are trying to figure out where to put the money to work. And obviously, even though the GameStop proved that these things may end badly and may end quickly, there is still a tendency to look for another cases where this could be at least replicated. And the cannabis sector is the one that is in the spotlight right now. At least was last week. We'll see if it continues this week. And the Tilray stock was one of the stocks that were in the spotlight, and the price increased dramatically. As you can see here on this upper chart, it wasn't very popular stock before. Actually, most of the ratings that are gathered by Bloomberg were neutral, were holds. So you could say that, well, it was just like any other stock, probably even less than this, because most of the time the ratings are buys or overweight or aggressive targets. So obviously this stock wasn't so hot before. It's a bit different from GameStop phenomenon, because at least stocks in this sector have some future for them. But even as you can see here with this stocks Miracle Growth company, even sometimes improve their results from year to year. However, if you look at the valuations, they are still very, very lofty, and that's, I think, the greatest example why this is another pump and dump candidate. If you look here, other than Altria, which is, as you can see, by far the largest stock on this list, but it's the largest and it has, let's say, reasonable metrics with P at 18 and P to sales less than 4. It's because the most of the results come from the tobacco sector. So it's only entering the cannabis sector, so it's not really cannabis stock right now. So the other stocks, as you can see here, Afria, Hexo, Aurora Cannabis, these are the cheaper ones with price to sales in the neighborhood of 10, which is above what you have for top US tech, which is from 6 to 8, which is still very, very expensive and way above the historical averages. So here these levels are even higher. So easily we can say that it's not like buying great opportunity. It's more like finding another sector where the Reddit community thinks, let's try to send it to the moon, as they say, and we'll see what's next. And on what's next, we know it's usually the dump phase, where if you are not quick enough, you are going to hold the bag. And I think another interesting chart that shows that on top of the options market, which we discussed before, which is an incredible zone where there's so many calls on equities, you have also the penny stock phenomenon where the penny stocks is a stock which usually costs less than $1 per stock. So it's easy to buy because it looks cheap, even though it might be a junk, and the stock might actually be in a very bad condition fundamentally, but it looks cheap from nominal perspective. So for many retail investors it may look attractive, and this penny stock trading phenomenon really exploded over the past couple of months, and it's another bubble phenomenon. So how to handle this? Well, like I was saying for quite a while, we are in this late stage of the bull, which is quite unpredictable. How far can it go, especially in range? Because in time we still don't know, but at least the history says that it's usually a couple of months, whereas in scale it can be really brutally strong, because we are in the phase where there are no, at least very few people say that there are bears or there are sellers. So this is really one-way market, where with the buy the dip market, where with all this money around, until we have some scare on the market, which seems to be remote right now, it may be, you never know at which point it could reverse. So you have pretty much two options here: either buy the lows and continue, hope that this thing continues, which is certainly not something that we have right now. We had local lows over here, whereas right now we are at the upper limit. Or use this upper limit, if you are stock investors, to hedge your portfolio with the CFDs on indices to benefit, or to take down some hedges where the market takes profits and moves lower, like it did 2 weeks ago. So probably the worst thing you can do is to short the market and stick with the short whatever happens, because it really, you may be right at the end of the day that the market is completely detached from the economy, but meanwhile it may go so much further in this stage of the rally. All right, let's move on to the macroeconomic section, where we have two previews for FOMC minutes and retail sales this week. So let's start with FOMC minutes, which takes place on Wednesday. As you can see on this chart, the Fed pumps so much more money into the markets compared to a previous, let's say, cycle, where it was nowhere near the levels that we have now, not to compare it to what we had in the spring of last year, where these levels were absolutely crazy. Like I said last week, it's still not enough to cover borrowing needs of the Treasury. So the Fed will want to put away any discussion of tapering as farther as possible. So they don't really want to discuss it, because they don't want to have the impression on the markets that they may taper, because this impression alone could send bond yields sharply higher and destabilize the markets. So they don't want it. But obviously, as investors, we want to see if there was any discussion of that kind, and that's something that we need to be on alert when the minutes is released this Wednesday. The other release is retail sales. For this inflation scare to actually materialize, even if, like I said last few weeks, it's relatively it's not very probable that the Fed is put against the wall and needs to hit the brakes with monetary policy because of inflation. Partly because they are looking at the PCE core inflation, which is not really the inflation that consumers feel, which is quite strange, but this is what it is. But if there is at least a risk of this happening, we need to see consumer demand accelerating in the months to come. So retail sales data is certainly the report to be watched, and credit card data suggests that at least it's not yet present, that this speeding in consumer spending is not yet there. So we'll see. I think spring months where these Biden checks arrive, when economy reopens, it's going to be more interesting from that perspective. But right now I wouldn't expect big numbers yet, because this is January report, so probably the money in most of the cases were not even there. All right, let's move on to the FX. This is quite interesting because we are seeing here winners and losers of 2020 so far, and as you can see, we have emerging market currencies on top and on the bottom, whereas the majors are sitting idle. They are looking at this craze on the equities. They are looking at surging commodity markets, and they are doing very little. So the question is, will US dollar eventually react to rising bond yields? Actually, we can see it better on this chart. Let me show you it here, where US dollar is really at the support level, whereas bond yields are surging higher. So you have downward trend here and upward trend here, whereas these two things should be moving together, more or less, obviously. So after this, let's say, bottoming out formation, which failed again, like it did here, we are at a similar point that we were at the beginning of October. But right now, the background is quite different. We already have vaccines. We already have the reopenings in the spotlight. We already have bond yields at much higher levels, and the dollar is lower. So the question is, will the markets use this support to take advantage of this fundamental opportunity? When we look at the fundamentals, you can see that the US dollar is still the most oversold major currency by speculators, whereas the other ones are overbought, especially New Zealand's dollar, Japanese yen, but also the euro. So from that perspective, there is certainly some possibility that this could happen. We'll see if it does. The support is there, the fundamentals are there. The question is if the market picks it up. On the euro dollar, it's also interesting level, because obviously euro dollar and dollar index are quite related to each other. So what we have here is a resistance line above 121.70, which is about 40 pips from where we are now. So we'll see if we go higher than this, then obviously from technical perspective the whole outlook will be very unfavorable for the US dollar, because right now we already had this bullish engulfing, which we discussed last week, and we said back then that US dollar could be in trouble, and it actually was. But right now we are nearing another point where if the US dollar wants to reverse the trend, which was standing for quite a while, the US dollar bulls, they need to act very soon. All right, and finally the platinum market we want to discuss today. The platinum was doing actually quite well last week, even though we had this rising bond yields, which is usually not very good phenomenon for precious metals, even though the gold was struggling. Platinum prices soared, and the main reason is that platinum starts to look attractive as substitute for palladium. As you know, platinum and palladium, as you may know, these two metals that are quite rare, they are used for catalyst, but traditionally platinum was used for diesel and palladium was used for petrol, gasoline cars. So obviously with all these trends that we have in the automotive sector, both petrol and diesel are not on the right side of the market, but obviously the diesel is especially under pressure. So you could say the platinum could be doomed because of this. It's being used in this least attractive sector. However, with price changes that we had over the past few years, where palladium soared and platinum tanked, actually platinum is at above half of the price of palladium, and it starts to look attractive for catalyst producers regardless of the engine type. So the industry sources say that this is already taking place, and therefore it may take platinum prices higher compared to gold, compared to palladium. Obviously, the other factor is the ETF market. As we discussed many times before, it was a factor that stood behind gold and especially silver last year, where popularization of these forms of investing fueled the demand side of these markets. Obviously, for platinum, which is a small market, expansion of the ETF investing is probably a very bright spot. So these two factors actually may help platinum over the medium term or over the longer term. Obviously, short term wise, platinum is looking relatively overbought, especially compared to gold, which is in a downward. It looks like a downward correction, still looks like a downward correction to me. But so obviously from that perspective, you can see platinum is doing exactly the opposite. So you could say it's no longer market that is certain, it's not oversold. Is it cheap? Like we discussed, it's still cheap versus the palladium. So well, to me, to sum it up, it's at least worth considering as another alternative asset in your portfolio, given the central bank policies, given the that everything is expensive these days. So you need to diversify in order to make your portfolio doing well, maybe sometimes doing slightly less well during this expansion phase, during this boom phase of the markets that we have now. But if it's more diversified, if it's more hedged, like we discussed with the indices, it will be far more immune if something bad happens. So with this in mind, I wish you a good week. Please stay with us watching the news section, which we try to make as attractive, as complete as possible for you in Xstation mobile platforms. And we'll see each other next Monday at 7:30 a.m. Have a good week. Goodbye.